What's going on, everybody? I'm Michael Silva here. You're watching the Stock Market Brief Show. In today's video, we're going to talk about navigating this volatile market. I'll give you my analysis and some trading tips, kind of walk you through what it is that I've been doing to get some decent year-to-date gains this year so far. Let's get into it. Okay, everybody, welcome back. Most of this year has been very volatile, as we're well aware of. And when there's a lot of volatility, it makes for good intraday trade and shorter term trades. Typically longer term like swing trades and breakout trades, they typically fail more. So in today's video, I'm going to give you kind of an analysis of and walk you through what it is that I saw intraday today. So maybe if you see it in your trading session, you can, approach the markets a little bit differently there too as well. And then I'm also going to give you kind of a setup game plan for going into tomorrow's trading session. Now, overall, today's trading session, what led the way? Energy and financials. What was the laggard? Technology, which we kind of thought was going to be the case. We're going to see some of these big tech names get hit. Google was hit 2.83%. Microsoft was down 1.49%. Apple was down 1.23%. They're coming off of very strong moves already, so it's likely to see them take a little bit of a breather or digest. We'll talk more about that there later. Now, what led the way, right, was financials, where we saw stuff like Bank of America. It was up 5% almost. Wells Fargo up 3.5%. And then we had some of the energy names there pop too. But when I really think about this, you take a look at XLF chart. Does it really get you excited looking at this chart? Really, all we're seeing here is just choppy price action. Is the financial crisis over? Is everything said and done? And are we going to start ripping way back up? Well, there's always a possibility that we rip back up, but that just still doesn't structurally fix what has currently happened in this market. And, if you take a look at the regional banks, just look here. The regional banks gapped up today a lot, but they closed near the lows of the day. So, most of that kind of optimism right out of the gate faded all throughout intraday, which is not really that great of a sign. Overall, what took place in the 10-year yield? The 10-year yield had this massive move to the upside, up 4.38%, bringing the close today at 3.5%. And I tell you what, bond volatility still remains above the pandemic high, so it's above that, and it's still trading around levels where we were seen at the great financial crisis. So this is not to be messed with. This is some insane volatility right now in the bonds market. What took place in the yield curve. The yield curve backed off a little bit today, still went to deeper inversion. It's now 41 basis points inverted. And the 10-year and 3-month, this thing is flatter than a pancake over here. It's now trading at 38 basis points of inversion. You can see here has the 3-month spiked up there pretty intensively. Now, let's go ahead and hop into the IWM. This is one that we talked about that I was going to be watching for today's trade, and I'll walk you through what it is that I saw intraday and why it made me want to trade it. Now, we already talked about yesterday how we undercut this low, right? This is basically a U-turn type trade where you get this undercut and you could potentially buy strength back in. It flushes out long positions, it creates new shorts, and then all of a sudden you have to see this flip, which sometimes pushes us price back up. Now, we're trading above the week-to-date anchored VWAP, which is also the daily, right? Because today's Monday, and we're back above that 5-day moving average, but it is what? It's neutral, it's flat, and price has really just been going sideways. You can see we tagged the daily expected move today, and we started backing off from that point. So what did I see intraday that made me say, okay, now I'd be looking to trade IWM? Well, if I take a look at the 1-minute chart, this is what I posted out into the Discord group, Patreon group, Discord group. And basically what I was seeing here was price was out of the gates, right? We were low, where we came out low, we came back up, we came down. It was just choppy price action. You can see once we've came through and down through that daily VWAP, it held there as an area of resistance, really not creating any good trade unless if you're very, very tactical within here on a minute time frame. But what I did notice here was once we got it back above the daily VWAP, we started to flag and move higher. And I was just watching for this high of day to be taken out. Now, typically when you get a high of day that's broke, especially after you get some nice consolidation through it, you typically get some sort of a pop. So when I zoomed into it, this is one of the little notes that I said, okay, we had a nice pop through the high of day, which you can see at 174 to 174.20. That might not sound like a lot, but 20 cents per share, if you're trading some size, that's a pretty significant move if you're a very tactical trader, okay? And then I noted that, I'm looking for a back test, so a pullback here or potential U-turn where it comes back through and then back up previously how we showed on that other chart. So what took place? This is what took place. The price came back down, it back tested, it kind of moved around this area. And this is what I find interesting. If you took this shot here, you could have just got out right away. And then you said, okay, if price comes back, this is where I'll enter into the position because it's showing that, hey, you don't need to go through any time or, craziness while price is down here. But if price starts to build back up strength and we see it break through this kind of break-even area, it presents the opportunity that we may go test this high and potentially higher. And the thing is, when you really take a look at this, it was just pulling back, it moved up, right? And then we broke through this, it was pulling back, and then what we're looking for is a move back up to the high. So it's just playing a pullback within a series of higher lows and higher highs as it stands. Okay, so as it stands, yeah, we basically, I entered in over here. I played this. I also played this up to here. But then we came up, we started consolidating, and then we saw a pop through this level, which I don't have the updated chart, but we did see a pop through that level. And what that basically took us to was the daily expected move. So that's why it's also important to know where these daily expected moves are. Sometimes they can go through it, right? They can go 2 sigmas, but this time it came to it and started moving down. These expected moves, right? 68% of the time, price action closes in there. We're dealing with probabilities if you think of it as a bell curve. Okay, so that's one standard deviation, and price clearly came up to this level and started pushing down. If you're wondering how these levels are created, we're using implied volatility, right? So it's forward-looking risk. It's what the options market is pricing in as far as risk goes. Now, if I take a look overall at the daily time frame, really we're just in this sideways chop range here too as well. So is this like an excellent opportunity to go long? I mean, yeah, maybe you can catch a little bit of a move to 180, but these type of things in this type of chop, just be aware that, hey, this is better for intraday trade. You can get lucky, right? Like we might break out and we might try to come back up to this 187.50. This day right here, right, we gap down and we close through the body over here, creating a piercing pattern. And that's what kind of brought us back up through here. So that was a good little move right there. We have the MACD that's starting to curl itself over there too as well. So that's positive, but just be mindful that, yay, price action is below a neutral and a neutral 200-day moving average. It's below a declining 20-period moving average, which can act as a level of resistance. So you need to just be aware of that going into these next couple of trading sessions. If we take a look at the S&P 500, it was up slightly on the day, but it's very hard to determine, like, okay, well, I mean, it was only up 0.16, so relatively flat. So a lot of opportunities, once again, present themselves intraday while you trade within the range of the candle. As it stands, yeah, we're still in this descending broadening wedge pattern. Okay, we're above the 200-day moving average, and we're potentially still here in this flagging pattern. So what did I see intraday, and how did I trade this? Well, this is one of the notes that I passed out on my announcements thing on the Discord. And I basically said, this is not where I was trading, right? So as of this moment, I'm not trading this chop. And why? Well, because we gapped up, we got below the daily VWAP, and we started moving down. I was just noting that we were back there at the 5-day moving average, right? The 5-day moving average is inclining, it's holding a support. So, hey, maybe if it takes out this low, it opens the door to go lower, but it was holding there, okay? But what I noted was, if you look at the structure from a fractal standpoint, you dive into a 1-minute chart, right? Multiple time frame analysis, what I saw was an inverse head and shoulders, right? An inverse head and shoulders pattern that was forming. And this is what it looked like at the time of posting it. So you can see we had a lot of chop out of the gates, right? The kiddie pool over here till 7 o'clock or 6. Yeah, about 30 minutes into the trading session, right? This is the first 30 minutes. You get a lot of just choppy action. So I don't typically aggressively trade within this area. I want to see what happens later on and see if anything forms where it really gives me a solid risk to reward. As you can see over here, we tagged into the daily VWAP and we really didn't come back into that area. So the bears, when it's below the daily VWAP, it tells me that the bears are in control here. And you can see price flush, came down, flush, boom, boom, boom. And as it stands right there, what I saw was, hey, we're potentially basing out here, creating an inverse head and shoulders. If that's the case and we break this neckline or this daily VWAP, that can bring us up into this area as a potential target. Okay, so what took place with that chart? You can see price action. We tagged that neckline. We started coming back down, right? It was a strong move into it, not really where you want to enter. You'd want to see more of a consolidation. You saw the pullback into it, still holding the structure of this inverse head and shoulders. Okay, and we pulled back, we got above it, we pulled back, creating what? Another higher low. Okay, so this is still within the nice structure, and then we started moving back up and we tagged that measured move. So it doesn't always work out so perfectly like this. And you got to be honest, like look at this chop, boom, 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 boom. This is very hard to trade. So you really need to look for like, okay, are we basing out right here? There's a possibility. Okay, so this looks like an opportunity. Okay, and same thing with like IWM around the same time. But how did the SPY finish? The SPY finished, right? It hit its measured move up here, and then you could see we came down, we bounced, we gave up the daily VWAP, and then we really started flushing. So overall, what did that do for the daily candle? The daily candle turned out to be a somewhat of a shooting star candle, which tells us, hey, if the S&P 500, the SPX gets below that 3970, that might have follow through to retest the 200-day moving average down there around 3930, 3940, okay? So it's not the greatest looking candle overall from a daily perspective. Now, if we look into, okay, what can we do as far as going into tomorrow? I want to first preface this once again, like I said in the other video, the trading opportunities, it does not look all good right now. And it's because just look at the price action. The price action is wide and volatile. It's not allowing for that grade of trades to be set up. So you got to look for key levels. And what are the key levels? I like to look at the daily expected moves. I like to look at the weekly expected moves. I like to look at anchored VWAPs too as well. So you can see this red anchored VWAP here. That's the year-to-date anchored VWAP. So you can see price action comes up, it got rejected, came up, came through it a little bit. This was during the Fed, right? The Fed announcement over here, and then it was rejected, came up here, rejected, came up here, rejected. So what do we need to see going into tomorrow to be more bullish? Well, you want to see this high taken out, okay? You want to see get back above the week-to-day anchored VWAP, and then it opens the door to 399.85 for the daily expected move. But then also potentially if that bullish action continues, it could open the door for the weekly expected move. Maybe not tomorrow, but we have a long trading week up ahead. Okay, below us though, there's some key things. We've already seen a very significant move and it needs to be digested. And as it stands right now, do we digest it? No, we gapped up. Okay, we came back down to fill the gap, we bounced, and we close around, if not near, the low. So this is kind of like, an exhaustion gap. If we start getting below the low here, that opens the door to 39.13, the daily expected move, and also this anchored VWAP, which is what? That's the month-to-date anchored VWAP. Now, as it stands right now, price action is still above a inclining 5-day moving average. Okay, so this is what I'd be saying for tomorrow. Like if we gap way down or some, a big hit takes place or we get flushed down here really quickly, I'd be looking at this potential area for potential bounces, because if I bring up a couple of indicators here, if we get a strong move to the downside and, these levels hold down here, the RSI might go into oversold conditions. It might create some sort of a falling wedge type pattern. And that is where you can potentially play for little intraday bounces to the upside. So that's kind of something that I would be looking at. But as it stands right here, like you really need to pay attention to that price action intraday, like the examples right here that I was showing you and right here that I was showing you in the IWM. Now, trading intraday, it makes it a lot easier when you have software like this or you're looking at level 2 or market data, because it shows you the order book and where orders are at. Okay, so for example, I'm going to show you today's price action. I'm going to show you some key levels going into tomorrow. These levels, they can change, right? Order books, they can change. But going into tomorrow, if I'm looking at ES, the upper expected move is at 40.44. and 39.81 to the downside. So ES is down here and here. So there's a couple other areas of interesting liquidity that took place after the trading day was closed. So the day closed over here, right? Boom. And now these couple levels opened up, and that's right here at about 40.3750. So by the upper expected move right here, you can see that kind of heat map right there, how it kind of lit up after hours. And then also even down here by the lower expected move, we have this is the lower expected move, but down beneath that further, is that 39.50. We have a little spike in orders there. And if it gets even further outside of that, I wanted to call out, hey, there's a big order of liquidity that's been kind of just hanging out up here all throughout the trading session. And then it's even here in the after hours session. So if price all of a sudden gets sucked back into here, pay attention to 4,100 because that is on the table now. Beneath that is at 39.37. So those are some of the key levels. But as you can see, intraday, if we started the day over here, you can see this level was an area on the heat map with a pretty big area of resistance. And you can see price try to come up there and it was rejected. And it stayed there all day. And you can see price try to come up. But still, we had levels there of liquidity that just did not get fulfilled, that started pushing it down. So you can see, I see a level of liquidity here, and then it's pushing itself down a little bit further. So you want to see that type of stuff absorbed to head higher. That's all I got there. Let's go into the Qs. The Qs is also pretty important. This was the one that was down. It lagged on the day, right? After seeing already a big move, go figure, right? We have to digest. But the last 3 trading days, we've been just trading within side the last couple, this last trading day, sorry, over here. So the last 3 days, we're trading within this candle. So it's a contraction, right? Price is contracting, it's coiling up. So either we're going to get a break to the upside or we're going to get a nice little pop to the upside. It's in bullish context overall. Today's move down was done on low volume. So, this could be digesting. On a negative note, we have a high and a higher high where the internals, the MACD, you can see we have a lower high, so a negative divergence there. If I bring you into the 15-minute chart, this is actually a little bit better of a setup in my opinion because it's more defined. And I'll show you a couple examples here, but you can see the Qs here are coiling up. Okay, the Qs, boom, boom, they're coiling up. So it's either going to be making a move to the downside or to the upside in the very near future. But what I see here, okay, prices below the week to date anchored VWAP, which is also today's daily VWAP. It's below the Fed anchored VWAP, and it's also now trading below the 5-day moving average, which is still inclining at this time. So I would not be bullish the Qs here until we change its current short-term trend. Its current short-term trend is this. We have a high, we have a lower high, we have another lower high, and we have another lower high. So to be more bullish, you'd want to see Qs back above here. But if Qs get back above here tomorrow, okay, maybe that takes us where? To 311.67, so you get a little pop up there, maybe moves around like that. Possibility, right? However, you got to understand the bears are making progress to the downside, and it's really kind of in this zone of support. It's kind of just holding up. So you got to say, if this gets taken out over here, that opens the door for a little bit more movement to the downside to 305.85. And the reason why I'm pointing this out, because we're all below these main anchored VWAPs, that moving average, price action's below it. So, hey, we need to get this fixed fast if you're bullish. And if it's not, it's definitely opening the door to take out this low, creating what? Now we have lower highs and lower low. That opens the door to that 305.85 from the short side. And one thing that I want to call out between this price action, I'm zooming out now. That's what I just showed you. But take a look over here too as well. This right here is showing you, okay, we had a strong day, boom to the upside. Well, that's what this was right here. We gapped up, right? And then we started moving up higher, boom, boom to the upside. And you can see here we had a high, a lower high, a lower high, and a lower high. So right here we have a high, a lower high, a lower high, and a lower high. And this happened to be right around that 5-day moving average. This is right around that 5-day moving average here. So we flushed down that day, we came back up, and then we made some lows. So does price need to consolidate further? As it stands right now, that's a pretty bearish looking structure. It would be much more bullish if we can start taking out that high, and then the next high would be that high to take out. The last chart that I want to really go over from an index perspective, then we'll touch on 2 indicators, is the Dow Jones Industrial Average. The Dow Jones Industrial Average broke out of this downsloping trend line. We backtested it once, we backtested it again, and now as it stands right now, I just want to throw the possibility that we are wedging right here, which could create a pop back up to try to test these highs. Now, another way to look at this is potentially bear flag, okay? And we are holding that 200-day moving average. So you'd want to see it hold the 200-day moving average to be bullish. If it comes back down, I wouldn't be looking to really try to go long. But if you are trying to scale into a long position, I think it's bullish up until the point really it takes out this low. Even if it gets down here and it's below the 200-day, it's really just kind of consolidating. But yeah, if it takes out this low, I'd be much more hesitant. Another thing to pay attention to is that we're below a declining 50-day moving average. It's starting to curl over, and we're below that anchored VWAP from the start of the year there too as well. So there's still a lot of price action, a lot of negatives looking things overall in the market. So we need to be, once again, right, it's a very volatile market. That's what I'm looking at to navigate it. We just got to be very careful and safe with our hard-earned capital, right? It's all about protecting. A couple other indicators that I want to just really quickly get into was the summation index. It's starting to potentially curl over here, which could potentially mark a change in trend. We did have positive breath finally step in over here, so that's a good sign. Overall for the NASDAQ composite, right? The NASDAQ composite has been getting hit pretty hard, but now we're starting to see a little bit of relief here. If we start to look at the summation index, that got back above zero. Sorry, not the summation index for the New York Stock Exchange, but the NYSE McClellan oscillator got it back above zero. And this is still really pointing straight down. These got beat up pretty hard, but this is at least, you know, a decent sign where some breath is coming in. It could potentially produce a bounce, but it could also lead into just, you know, a high, a lower high, and a lower high in breath where we start coming back down again there too as well. So, you know, conflicting signals overall. Market's very volatile. Hope today's kind of price action, walking you through what it is that I saw intraday, may help you in the near future. That's all I got for you on today's episode, everybody. Have a wonderful night.